Rate hikes, rate cuts. Stocks were crashing yesterday, and stocks are all the way up today, rallying and rallying and rallying. What's going on? Hey everyone, it's Daniel here from InfoRest. Hope you're all doing well. Let's talk about what's been going on with the stock market, and also we'll talk about the bond market as well, especially after yesterday at 1 p.m. when Jerome Powell, the head of the central bank, came out and talked about monetary policy. Now, for those who were watching the press conference, you might have heard Jerome Powell swear during that time when he was interrupted, telling to basically beep, close the door. That's not what I'm talking about there. I'm talking about mostly what was said in terms of rate hikes, right? And there's so much confusion. We hear about rate cuts. We hear about rate hikes. Are we going to get rate hikes more down the road? Does this data mean we're going to get rate cuts? And the biggest takeaway from yesterday was that Jerome Powell came out to kind of downplay some of the dovishness that we've been seeing or hearing from the members and some of the rally that we've been getting in the past couple of days in equities, and basically downplay that with some hawkish comments. The biggest hawkish comment that came out from Jerome Powell was basically him saying that we may actually not be at restrictive territory. We still have a long way to go in terms of bringing inflation down. What does that mean? We're a long way, and we may not be at restrictive territory. He's talking about rates may not be at a level where it is restricting the economy and bringing inflation down well enough. And you might be thinking, that maybe Powell's bluffing here, or what does he mean? What is restrictive territory? What is a restrictive policy? And actually nobody knows. Nobody knows where this restrictive level, and the Fed also doesn't know where this restrictive level is. That means in the US, rates may be, the federal funds rate may be at, 5.5%, but, it could go higher. And how much higher? They don't know, and nobody knows. Right? It all comes down to the data, all comes down to inflation metrics. We did get Michigan inflation numbers today as well. That came a little bit hotter than expected. So that kind of created a little bit of selling in the bond market. Now, but the equity markets went up on the sentiment component, basically coming in weaker than expected. So when Jerome Powell came out, said that, hey, we're not at restrictive territory, the stock market yesterday sold off aggressively all day. All the equity indices, we're talking about S&P 500, Dow Jones, Russell 2000, NASDAQ, all selling off to then reverse all of those losses today, completely go back up higher. And what's going on? Are we getting higher rates? Isn't this supposed to be negative for the equity markets? Now, if you look at the bond markets, which are a little bit more sane, right? I like to look at the bond market more than the equity markets to get a gauge of how the feeling came about from Powell. The bond market initially was rallying on also reversing some of its losses yesterday, because the bond market also sold off from a bad auction, and on top of that, Powell coming out aggressively hawkish. But it then turned around, especially after Michigan's numbers, the higher inflation numbers, and sold off for the rest of the day, and you had equities just going up higher and higher and higher. And my take on this is that it's more euphoria. It's more of a short squeeze in the equity markets, which basically means nothing about what the true feeling is behind what Powell is saying and how hawkish he completely changed or flipped. Now, although he's not, super hawkish in the sense that he did not promise a rate hike in December, right? Did not come out and say, hey, okay, we are 100% hiking in December, but he did leave the door open saying that, hey, we are not at restrictive territory, which means that we could do more, especially next year. And if data is not coming, inflation data is not coming down well enough, And we're not talking about just 1, 2, 3 data points. We want to see a bunch of them in order to start making a decision. And if data continues to be resilient, the economy continues to be strong, like he mentioned, right, then we could continue to be aggressive, keep things tight, and maybe even do more, right? And we heard also some Fed members as well come out more on the hawkish side, say that, we might have to do more rate hikes. So are we going to get a rate hike in December? That we will know after we get the following CPI prints. We get December CPI print. We're going to get also another CPI print this month as well. We're going to get jobs data as well. We'll see if anything changes there. But the probabilities are very, very, very low that we're not going to get any hike. And obviously no rate cuts, right? Unless something is really, really breaking. But for next year, that could leave the door open for more rate hikes, which means that if data is not getting weaker, then they could do more and try to bring this inflation down and really, really hurt the economy from a demand side, even though it's already been hurting, even though the demand side has been softening. And you could see in the data, you could see it all around. But here's the thing. In order, according to history, especially with the supply chain constraints that we have that, is feeding and has been feeding into higher inflation, and because of all the money printing we have, and from the fiscal side of things, where the government's printing money and spending money like a drunken sailor, right? Might have heard of that term out there from few notable traders and investors and hedge fund guys. But if this continues to be a problem, then Powell needs to do more. And I think that Powell might be making a policy mistake if he's not hiking more. And I think he needs to do more, and be aggressive in order to bring inflation down. According to history, when you look at how to bring inflation down is when you tip the economy into a hard recession, when you make things really, really restrictive. And if things are not being restrictive, they don't want to be behind the curve. And they said that. They mentioned that. They said that we don't want to be behind the curve. We don't want to be easing too early, because the consequences of easing too early is that you could get runaway inflation and it could be worse off. You could never catch up to it, right? Keeping things tighter for longer and maybe even hiking further, at least if you do create some damages in the economy, and they said, we have the policies to fix things. We've got the tools to fix things. So obviously, you see them leaning towards being more tighter and staying tight because they got the tools to unwind and untighten things when things get worse off, versus easing too early because, everyone's pressuring them to do so, and then realizing that they made a big mistake, right? Again, you don't want to be like Arthur Burns. You want to be more like Paul Volcker if you want to attack this inflation. And right now, Powell is in between, but I would say more on Arthur Burns kind of thing, because if he was really Volcker, he would go with the rate hike in the last meeting. He would go with another rate hike in December and continue hiking till something breaks, right? And to bring that inflation metric down. And that's what Volcker did. Arthur Burns, on the other hand, wasn't able to bring inflation down with the tightening that they've done. So you're seeing Powell kind of, even though he's trying to mimic Volcker, and he idolizes Volcker for the work that he's done in the 80s to bring inflation down, he's not really matching up to Volcker. And he's got quite a hard job as well, a tough job as well, try to balance things, not trying to break things too easily, too fast. He's trying to engineer a soft landing. But as we know, according to history and according to data and statistics, that soft landings are generally a low probability, versus hard landings tend to happen more often than not. So, are we getting rate hikes? Are we getting rate cuts? There's some reports that say rate cuts are coming. Some are saying rate hikes. These are, when I tell you about these things, I know there's some comments out there that's saying that, hey, sorry to burst your bubble, rate cuts are not coming, blah, blah, blah. This is not my opinion. I'm just showing you and telling you that the data out there, what the bond market is also pricing in, that possibility of rate cuts to come. Because why would that be the case? It would only be the case, from my opinion, if something's breaking. If it's not, then we're getting tight conditions for some time, higher for longer, and we may actually get more rates down the road if the economy is still on standstill. So soft landing, yeah, we are in soft landing right now, but don't forget that could change from soft landing to hard landing, right? So everyone's talking about the soft landing, which we actually probably it's looking like right now. But that can change very quickly down the road, couple months, a year from now, where you can get soft to hard landing. And I think that's how it generally goes when you look at past recessions too. Anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers, bye.